Hello, everybody, and welcome back. We're doing episode 8. Today, the market had a downturn, as expected, but I wasn't expecting it this soon. Trump basically announced that we're not going to have a phase one trade deal, that we may have one beginning of his next term of presidency, basically, 2020. Not surprised. Not surprised one bit. I expected it. Well, most of you guys expected it because I brought it up. It's not gonna work out. We're never gonna have phase one deal. Market rallied, of course, throughout the whole process, and now they get the news that there is no phase one trade deal. It's nuts. He announced it October 11th. Basically, we have a trade deal. We just have to get it, on paper and signed off. We're gonna have a ceremony, whatever, on Chile. All show, all talk. We figured, we knew this. That's why most of us are in the green again. We bought the options when the gold came down to 14. I said 1448, but it came down to 1449 and it got clipped there. So right now we have we're back at 1480. We couldn't get into that level, but now we have. So what am I doing next? What am I looking to get out of? I'm gonna tell you guys. I said it before. I said this whole thing, when the gold sold off based off the trade deal, phase one coming into play, it's coming into fruition for everybody. Gold sold off. I didn't think it was a reason for it to sell off because of that. I thought it was a good thing because you get all the people that were bullish on it, on a trade deal, of not having a trade deal, get out, flushed out of the market. They sold. I was secretly looking, not secretly, because I told you guys, I was looking to see if it was gonna test again that 1449 because it just got clipped. See if it would test it again and get more people to sell, and see if we could come down to that 1410 level, 1420 around there, for even 1400. Get all the sellers out year end, and then buy more options for February. That's what I was looking for to do, but then the news broke out today, so I was like, okay, well, we got to take it because we're in it. So we were looking to get the 1480. We're above it, 1485 right now. These are the futures. They're just up 11. They're up, not much, but they're up. Morning probably negative. I think this whole week we were gonna have a negative week overall. Like I said, I wasn't surprised. I expected it. All talk. But now he has December 15th coming up on him on the trade, on the tariffs that he's talked about. So that's gonna hurt the consumer. 73% of the market is consumer based driven, expending. So if companies can no longer pass or absorb the tariff hit, they're gonna have to pass it on to you, to me, to everybody around. You're gonna have to pay for it. Remember, he pushed back the tariffs because he didn't want to ruin Christmas. He wanted us to have a good Christmas. That cool. Thanks, it worked out. I got Elgato key lights, phenomenal. We don't have lighting problems anymore. I don't have to have the kitchen lights on. It worked out. I'm thankful. I'm even more thankful now again that it's not working out. It's not gonna work out. That trade deal is not gonna work out. Plain and simple. So he pushed back the tariffs because of the phase one deal again after that, and he doesn't want roll back these December 15th. So China's been saying that they want all tariffs rolled back, or not at all. For them, it's a big thing, of course. For us, it is as well. That's why we haven't. That's why he hasn't given up the only leverage he has, the only card he has. Can't go to the World Trade Deal, WTO, and ask them to make them play ball. Not gonna happen. So tariff is the only tool we have. So he's using it. Makes sense. Now, these tariffs are gonna come and hit us. When everything came out, these tariffs, when he was so mad in September, he came out with all this. They were saying that the consumer was gonna get hit. Consumers gonna get hit. This is gonna be extremely bad for the consumer. Now we're hearing that, oh, it's okay. All day today I was hearing, it doesn't matter the tariffs could come into play. The consumer will be fine. You know why? Because supply chains are gonna take the hit. Companies are gonna take the hit. People have gotten out from China, gone other countries, and shipped the stuff over. So they're not gonna get hit. Everybody's better positioned off. When this started back in 2017, think about that. 2 years, and now they're saying that they position themselves better. Most of them got out. Apple sold off today because it still depends on China. Even though they opened a factory over here in Texas, it still depends on it. You're gonna get hit. Somebody has to remember their iPhones are now cheaper. The margins are gonna get hit. Yes, they're becoming a service. I get it. They're becoming service. They're getting a mixed multiple. I get all that. It makes sense to have a mixed multiple. But their products are still made there. They're cheaper now, so the margins have to get hit. It only makes sense for the margins to get hit for Apple. So that's why I believe that's why it sold off. You're gonna feel it eventually. I don't care what anyone says. You're gonna feel it because those tariffs are gonna come into play. So let's see if I believe it happened. Okay. The Grinch stole Christmas. What happened if Trump's China tariffs go into effect December 15th?
China's trade abuses.
November 12th, we went through this video.
Billions of dollars in tariffs that China is paying for. We're not paying. China is paying. Because they're devaluing their currency to such an extent, and they're pouring tremendous amounts of cash into their system. They're having the worst year in more than 57 years, more than half a century. Their supply chains are cracking very badly, and they are dying to make a deal. We're the ones that are deciding whether or not we want to make a deal.
He's playing with house money. There's something they brought up in Fast Money too. He is playing with house money. They're right. Remember, his whole gauge of the economy is the stock market. It's rallied. Throughout the process, when he announced it October 11th, it's rallied. In his words, tremendously. It's rallied all the way to 3,000. What, Dow Jones? 3,000, right? It was 30,000? Oh, sorry. What? A month. I'll do a month. It's quicker. 28,000. Sorry, not 3,000. But yeah, 3,000 is S&P. The S&P 500, and it went up even more above that 32, 31, something like that. Let's just go through it. Da-na-na. Yeah, 31. 31.50. That's the one I was thinking about. On this whole news too, the dollar did sell off. Not a lot, but it did. 5-day chart, just quickly as you can see. The drop on it. If you expand it to a month, you're seeing the little thing up and down. Yeah, so basically, he's saying China's paying for it. In a way, they kind of are devaluing their currency. They pay for the tariff instead of currency going up. We pay for it. We have to. The consumers are gonna get hit with 15%. And the good thing goes up to 15, right? Meantime, the clock ticking towards December 15, when Trump has threatened to impose 15% levies on $160 billion in imports. You're gonna feel it. They're not gonna be able to take the hit all the time. It doesn't make any sense for supply chains to keep taking it, for companies to keep taking it. They're gonna have to pass on some of it to you, to me. What's it called? I had it here. Darn it. It literally just went through my mind. Business spending. They're not spending as much either. That's one of the indicators that we use to measure, they're doing good, if companies are spending money, or, saving money, or not doing anything at all. I brought it up in the past. They're still not doing anything. They're not going to be able to do anything. And quite frankly, you can't, until they sign something, you can't do anything. You're on pause. It doesn't make any sense. Like I said, I never thought the market should rally on that deal. So to me, it's all been about the Fed, and we're going to get into that. Liquidity that they've been putting into the market is nuts. But the numbers came out on Tuesday. I believe it was Tuesday. Monday. The manufacturing PMIs slightly better. The first one, not that big of a deal because it's not that big, or 0.4% better. But the SMI service manufacturing ones came out negative, slightly negative, 48.1 as expected. 49.2, that's what they were hoping for. Service PMI prices 46.7, 47.0. That's what they came out negative, and it rallied on Monday. It rallied yesterday. Gold rallied yesterday. The market sold off a little bit yesterday. So it's been 2 days back to back that we had a rally. So I was waiting for 1480 to sell, but because of this news, I'm not gonna sell on this news. I didn't even unload any of the positions I have on the gold options, because I think we're gonna hit 1500, 1500. I feel like we're gonna hit it at the rate that this is going. I feel like I said, there's gonna be a down week, so if it gets to 15, I'll start unloading, because the next low will be 1510, 1520, and the hardest low will be 1530. If we get above 1530, we're back in. I mean, we're literally gonna take off, but I don't think it is, because the Santa Claus rally that we're gonna have eventually. Every year it happens in the end of December, except for last year. But there's always some rally of form, which is why I also said that I expected it to come down. Gold, I was looking for gold to come down to those low levels of 1410, 1420 to get the sellers out, completely out, and then just position ourselves until you guys position ourselves. Well, the market rallied again because of Santa Claus rally. We were gonna jump into gold at that point because it was a total buy. Because it'll be lower, less risk and higher reward to pop above the 1560 level. And I'm serious, and I firmly believe that we're gonna be above that February. Something that somebody brought up also was there was contracts moved from they were rolled back from December to February last week Tuesday. Try to bring it up on the screen, but you can look it up. Somebody rolled back options. It was a big thing for all the people, the gold bugs out there. And somebody rolled back 300 million or 300 tons. It was an insane amount, and everybody, it was a talk of things. That's one of the things I like about options. People, you could kind of see what people are doing. They have to foreshadow it. One of the benefits of being there, so if you know that you saw that you wanted to buy gold at that last week, it was low prices still, a lot cheaper than they were today. Some of them rallied 5%. So that was great. That was a little hint that something was going on, but I figured that it was gonna be due to the repo market liquidity problems, that we're gonna have short-term liquidity, which is with the play on Walgreens that are brought up in the past. Why I'm short Walgreens, right? Why I have puts on Walgreens. That it was gonna go because Walgreens had rallied on the basis that it was gonna go back to being a private company. It was gonna borrow money, 56 billion, 55 billion around there, to go back to being a private company. So it rallied 2 days back to back, rallied all the way from $50, $51 to $62 in that ballpark, and that's when I bought the put, saying that it will come back. Out of the money puts, less risk. I was waiting to let go of that. I think I brought it up on screen. It was like $34 around there, a put. Sorry, excuse me. $34 a put. And I was willing to put, and I bought it on the beginning of the year because, again, the repo market that I had checked on in the past. If you don't want to watch it, just to go to All Lots, Bloomberg podcast, and they'll have it there. Just go ahead and listen to it. Great podcast. That episode's phenomenal, and they touch on that, on why I believe there's going to be a liquidity problem due to the banks having to pass the stress test. And again, if a teacher gives you an exam and you fail or you got a C, and then they come back and they give you the same test a week later, but for banks like a month later, whenever they know when they're gonna get tested on, or she tells you you're gonna get tested on. So you get the same exact test. She gives you back the paper. You already know which ones you got wrong, which ones you got to work on, so that you just look over it and you try and memorize it, or you see what you did wrong and you go back to the book and figure it out. It's simple, right? Once they give it to you, and they give you the same exact exam the next time, and they basically tell you, here you go, let's see if you can do better this time. Good luck. Well, you already know it. Even if the questions gets mixed around, they're not in the same order. The questions there are is reworded. Sorry. You're gonna know what the answer is, and you're gonna know what to do. So if banks need to pass their stress test at the end of the year, they need to pass. they already know how much money they need to have allocated and what they can't borrow. I mean, what they can borrow or what they can't let others borrow because they gotta meet their exam. They gotta ace it. You can't be the one that doesn't pass. So due to that, they're not gonna be able to let people borrow money. So that was the plan on Walgreens. Now with this news, I'm looking for Walgreens to come down 5%. It went down like today, like a percent, I believe. So it wasn't that much. So I'm looking for another 4%, 4-point drop. Does that, then I'm gonna unload half the position. I don't need to hold on to it all the way. How to make money if this happens this week? If it drops down to $55 a share, $55 a share, the puts I have, they're not in the money, but they will be worth more than when I bought them at $34. So I'm looking to unload half of that position and then write the rest for free, take profit, and write it for free. And if they get in the money, awesome. If they don't, I might sell another 20%. And if it goes down, if I see this not going down fast enough, and then maybe unload all of it. If I see this not gonna make it, but I'll write it for free once it goes to $55 a share, because those are the puts that I have that are $50. So I don't need to go all the way down. I just want to make a quick buck on it. That's always the whole play on it. Because I'm saying December, I don't think it's gonna go private. I think with all the liquidity problems, it's gonna put into question if it's even possible to have it completely done. Beginning of the year, who knows? There might be enough liquidity for it to actually get it done, or somebody might step up and say, yeah, here's the money. So I don't need to put myself through that. I just want to make a quick buck and get out on the Walgreens thing. So construction spending also came down. It wasn't as strong. So people aren't building, they're not sure what's going to happen. So that also affected the market on yesterday. These are the ones you can see. Just visual graph. It's coming down. This is last year's, 2016, when we thought we were going into recession as well. So they're there. What do you think is going to happen when we don't have a trade deal and everything slows down? 2020, November 2020, it could only go down worse. So today the market dropped more than 250 points. I think it was 280 according to the Market Watch. 280. WBA. Oh look, 0.4. That's what it was at. So like I said, I just wanted to bring it up because I might as well bring it up since it's on screen for you guys to see it. So the Dow fell more than 280 points, 250. I mean, they're not wrong. For a third day as Trump hints a trade deal delay. At that moment, the market sold off. The future sold off, actually. I was listening to Bloomberg. I wake up at 4:20 over here. Get ready for my day.
Well, I think the market run-up definitely has been predicated to a certain extent on at least some kind of a skinny deal, an ad product buy in exchange for perhaps some movement on intellectual
Crazy thing is, everyone says that this deal is not a big thing.
The market responded very
Phase one. I mean,
obviously the December 15th tariffs, waiving those or delaying them, moving them out of implementation, I think is going to be expected. I think there's obviously downside risk, especially in light of the weaker than expected manufacturing data yesterday. So if the positive inflection in global growth that people have been hoping for is a little more fragile than thought, obviously we're more sensitive to problems on the U.S.-China trade front.
Our expectation was that if there was a deal, it was going to be a skinny or light deal. It was probably going to disappoint relative to what was priced into markets, especially this latest run up in equities. And that in 2020, we're going to have to look for other drivers of positive market developments. We need to see a handoff from central banks to fiscal authorities. We need to see businesses start to invest instead of just relying on the consumer to drive the economy.
China's very...
Yeah, there you go. Business investment. That's what I meant. Sorry. That they're not spending money because they don't know.
Chill about this right now. I don't feel a lot of pressure to have a deal quickly. I've been around a bunch of senior retired government officials the last couple of weeks through a couple of events, and they're saying things like, this was inevitable, we knew this would happen sometime, we might as well have it now. There's talk that the next 5-year plan that is underway is going to be focused quite a bit on decoupling and reducing their dependence on the U.S.
We're losing the upper hand. We are not going to be tough. And of course, that's exactly what the Chinese did on Saturday, Sunday. They let the president know, look, we won't even come to the table unless you get a rollback of tariffs. So now the president feels completely betrayed. And so what does he do? He lashes out. Who can blame the guy? I mean, he didn't like him. He was just, once again, betrayed by the soft liners in the White House.
We certainly have a mercurial president, and different days you have different tweets and commentary, so hard to forecast the vicissitudes of that. But if you look out, target at the end of this year, the S&P 500 is 3,100, so we're pretty much around that level. And if you look into next year, the backdrop of economic activity growth should suggest that profits will rise 5 to 6%, and that will support a U.S. equity market that will rise towards 3,400 at the end of next year. So that's the general trajectory. If you look at the trading around that, if I were to put that on a path, you're looking at.
I get their whole point of why the market keeps rallying. Like I said, I believe that the market has rallied off the backs of the Fed. They're putting liquidity into the market, so they're putting liquidity into it. It could only go up, right? Don't fight the Fed. Why would you want to bet against it? It makes no sense. What I'm saying, if you're going to buy best in class, if you're going to buy something, you might as well buy best in class. Whatever companies are the best in that section, in their fields. That's what makes the most sense. That's why I believe it's been rallying. I've said that. Gold will rally with it. Gold will pick up on it, right? I said in the past, one of the reasons it's gonna rally. Right now, we're doing not QE. The balance sheet, I believe, last I checked, was like over 4. It was all over Twitter when it was all over 40% of what it was before. 40% of we're almost, according to everybody, we're 60% away from normal. That's the new normal. Having the balance sheet of what it was before. That's the new normal. We're 40% there. 40% of the way there. We have 60% of the way left to go. Since it started not QE, since it started the repo in September, from September to now, we're back almost 40%. They couldn't unwind it, and we're almost back. Look at that, 4 trillion. We're gonna surpass 4.4 trillion. Okay, we're gonna go above it. Why do I say that? Let me show you something that came up. Right, I don't have this one on this side. On the right, to monitor. So this came out 2 days ago. Federal Reserve considering letting inflation run above target. So I've said it before as well. Since the first beginning, of everyone that I met and everyone that asked me, what is my strategy? Why is it that it's working? Why is it that I believe that this is the way I'm doing things? How is it that I'm doing things? It's because of what they're doing. It really is because of what the Federal Reserve is doing, what we expected the Federal Reserve to do. One of the reasons gold sold off in the past in 2011, it was the Tea Party came into power. Right, Obama was president. They said that he was spending too much money. Government was getting bigger. We needed to cut back. So we needed to show him that we were gonna let him. So we got the Tea Party in the Congress, and they limited the spending. At the same time, QE was coming to QE3 was in play, and the Fed has convinced everybody that they were gonna be able to unwind the balance sheet. So everybody believed it. Gold sold off from 1,900 back to all the way down to 1,100 last year. So everybody believed that they got it under control. They were going to start unwinding. They started increasing rates. The whole 9 yards. Everybody believed it, and everybody the market sold off of all this. And I've said that the key word that they were using was symmetrical, meaning that they were willing. The word symmetry. They wanted everything that they measure, CPI, every measurement they have, to go above it, to go to the 2% mark. Even if it meant the other ones were gonna go above it. So I'm not surprised when this came out. This tells me it's bad for bonds. Inflation is bad for bonds. It's bad for the U.S. dollar. you cannot have it. You cannot let inflation get too out of control. Back then it was a massive thing. Nowadays, like, where's the inflation at? If you're rich, you don't feel it, right? Even by rich, I mean, like, if you're making $250,000 a year and you're living above, underneath your means, and you're doing everything right, you're not gonna feel it because you make a good enough income. If you're living paycheck to paycheck, you're feeling it. You see it, like, when you buy something, you gotta look for the deals. You gotta do everything in your power to make sure you get the best bang for your buck. If you're rich, you have assets. QE helped you. Why? It's inflationary. Asset prices go up. Your property goes up. You can refinance. You can sell it. You do whatever you want. It's your property. It's going up. So where is the inflation at? Right? The stock market has been, all it's been doing is going up. Because the QE, when they were tightening and increasing the rates, the market sold off. We're 60% of the way there. 60% of the way there to being back to what it was when they were doing QE3. We're not even doing. They're not doing QE, right? They made sure. Powell made sure that to say what they're currently doing is not QE, but they're gonna announce QE. Everybody knows that they're gonna announce QE because they've hinted that they're gonna announce QE. They're still doing the repo rate, oversubscribing. It's an issue. It's gonna be an issue at the end of the year when they're doing their tests. They're gonna have to get ready for it. So this is gonna be an issue. So I wasn't surprised. This tells me the bond market was gonna sell off, because if you're letting inflation run wild, you're not gonna be able to. Why would you want 6% on a 10-year? When you know you're not letting inflation run wild, and then it's gonna go above 2%. Why not just wait for it to go to 2, 3, 4, and then buy it, and then get that 4% for 10 years? 30 years, if that's there, what is that gonna be at? 5? Inflation told me that day that the bond market was gonna sell off and rotate into stocks. Buy stocks. Told the people at work, I'm like, oh, dude, this is good for gold. They're gonna revise the way that they look at inflation, but if they find out that inflation is in asset prices, because look, when you invest in a company, obviously, people, you want to know management. You want to know that they're the best, or that they at least been in that field and know what they're doing. And you want to make sure the company has a healthy balance sheet. They keep paying their dividend, and you have a dividend stock. You don't want to lose a dividend because if they announce that they're going to cut it back or whatever, it's going to sell off. The stock is going to sell off, of course. So what do you need to do is, you're investing in something, you look at the management. Okay, who's our current president? It's Donald Trump. What is he known about? Real estate. What does real estate do? He wants inflation, right? Not exactly. He wants negative rates. What do you say? Give me some of that. Negative rates. Because you're paying them. He's saying that banks are paying the consumer to borrow money. On Bloomberg today in the morning, I was hearing that banks in Germany are refusing to take deposits from small companies, small mom and pop stores, because they don't know what to do with the money, and it's costing them money to hold their money. UBS in September announced that anybody over 500,000 was going to get charged a fee to leave their money at the bank. Negative interest rates are not a good thing, but if you grew up in real estate, it makes sense to you. You want a weaker everything. You want a weaker dollar. You want inflation to go up, because like I said, it brings asset prices up. So it makes sense from his point of view. If you lose a company, it makes sense because of who we have as the president of the United States right now is Donald Trump. So I get his point of view. I get why he wants all these things. And I understand that. To me, as a negative, I'm going to be in silver. I'm going to be in gold. I'm going to be in emerging markets. I'm going to be in healthcare still. Because prices are going to go up. People got to pay it. Companies got to pay it. The other thing I want to bring up is the Wall Street Journal did this. The Fed has $95.56 billion in short-term liquidity to markets. They control the short end of the stick, not the long end of the stick. They're just dumping and dumping and dumping money into this market. They need to keep dumping, or else The minute they can't do it anymore, it's over. Here's the other thing. Eventually, people are gonna catch on, right? QE4, when they announce QE4, I believe the market's gonna rally, but eventually it's gonna come into play that when you do QE4, you're basically saying that we were unable to do what we promised in QE3, when everybody thought that gold was got sold off because we were gonna get our financial house in order. You're saying QE with QE4, you're saying QE3, 2, and 1 didn't work. So why is QE4 gonna work? What's the difference there? If gold sold off based on the principle that we're getting everything in order, with QE4 is literally telling you that those didn't work. We don't have an exit plan. We can't have an exit plan. You need to let capitalism work. You need to let companies that aren't making money go bankrupt. Unfortunately, you're gonna have to have unemployment. It's capitalism. If you let the financial markets do its thing, yes, it's gruesome, but it's gonna make it better, right? In order to build, you must be willing to destroy. You're gonna have some of these companies that are just negative and not creating anything productive and are just growth stocks. They're gonna get killed. The growth companies are gonna get killed. But it's gonna happen. It's gonna happen eventually. Gold, some of these gold miners are up 30%. Gold. Barrick Gold. Increased its outlook and increased its dividend. Best in class. Newmont Mining announced that it was going to do buyback, $1 billion buyback, stock buyback. Awesome, they could do it. Why not? Take advantage. Makes perfect sense. Why not be in those? Why not continue to put a little bit into these best in class gold miners, silver miners, Pan American Silver, making new highs, pays a dividend? Why not be in these? If you see that they're going to continue dumping money, you do not want to get off now here. Yes, people are making money. I'm telling you, if you're buying the best in class AMD, you're buying the Delta, or you're buying, one of the reasons one of the reasons I brought up Walgreens before at work was it was a lagger. It was trading at $40 a share. That's why I knew that eventually it would need to go up. I was betting that it was going to catch up because it was a lagger. Well, when the news came out, it really picked up. That's why I decided to bet against it, because it didn't rally with everything else. Normally, it rallied because of we're going to go private. So you want to look for that. Some of these people, because it will make you the biggest return. If you get the laggers in a market that everything's rallying, those laggers eventually will catch up and they will give you the biggest bang for your buck. If you want to try that, you could do that. You could 100% do that. Or you want to buy best in class and just keep writing it out. The thing is, yeah, you're making more money buying these stocks, or these stocks giving you 5%. But when they sell off and you're buying it at the high end, you better have stop losses. You better have stop losses on and know your risk. Obviously, put those stop losses on where you are willing to take a loss. How far can you push it? You just 5%, 10%. Only you know how much you could hold on to them for how long. But my advice is, if you're seeing that they're gonna keep dumping money into it, ride the gravy train. Get in the freight train. It's gonna go faster. It's gonna pick up steam. Yeah, it's a little slow. Yeah, it's going up and down. It's okay. Volatility is good. If you want volatility, if you're in the options market, it's a great thing. You guys can read the article. I gotta pay for it. I don't want to pay for it because I get this stuff other ways. Not that I'm cheap. I just don't like buying article news. I think it's weird because you can just find the same thing from a different person. Sorry about that. Different companies. Because they all get the same information, it's just different writers. Okay, so now knowing that we're in trouble, I'm quickly going to play this from the USA Today. Powell and the US Congress, they told them that debt is on a sustainable path, crippling ability to respond to recession. So we're not gonna be able to fight a recession. So you gotta keep the recession off. And like, well, we're gonna have a recession, right? That's something everybody says. We're gonna have a recession. I said it before. To be clear, a bull market doesn't end. It does not end due to timing, right? This is the longest bull market in history. Yada yada yada. It's not that. It's over. It's due to leverage. How much people have leverage. Overextended, bad deals. Not over timing. It's just not over timing. It's over. It's over the fundamentals. To me, the fundamentals are gloomy. They've been gloomy. They're getting worse. If there's a global slowdown, one of the things that's been raising the market was the phase one deal, and the optimistic was a phase one deal. Now we're gonna go back to we're going gloomy. The other thing is, I don't change my view based on what people are saying. That's not how you make money. If you do that every time you're hearing the market, people get bearish and then get bullish, or be bullish and then get bearish. You're following them, so you're gonna lose because you're always buying. You're buying late. So I don't. I believe in the fundamentals, and then I look at charting to try and figure out which stocks I would like to get my bang for the buck. So my mentality has been, we're gonna have a recession, but it's because due to all these things that are going on, right? Like I said, the auto loan, subprime auto loan, people buying four cars in 2 years, rolling over their debt to another car, to a new car. I know people are doing it. Articles are being written about it. There's bad debt everywhere. And yet people don't see it. People don't see the fundamentals that I believe they see it as positive. I see it as a negative. They say it's bouncing. I say it's getting worse. Perfectly fine. That's what makes markets, buyers and sellers. See the same data, different points of view. It's perfectly fine. So with all this negative data and all this kicking the can down the road, we're not in a position to fight a recession if we get to one. He said this in Congress. I forgot to bring it up, but that's why I'm bringing it up now, so you guys could understand. Why is it that I believe that the end game will be the dollar will no longer be the the reserve currency of the world? It was because of Brentwood when we had dollar on the gold standard. It's just a fiat currency. It's no better than Bitcoin. There's something that they're holding that there's no value in there. There is no real money. So the end game is going to be that we're not going to be able to because of this. I'm going to play the videos. I believe they did a great job. You guys could look it up. Again, you guys could read the article. It's a great article. USA Today.
You've probably heard that the U.S. government has a giant deficit. Well, it's true. But what exactly is a deficit? And how is it different from debt? Deficit is defined as an annual difference between government spending and government revenue. Every year, the government takes in money in the form of taxes and other income, and then spends it on things like Social Security, national defense, and healthcare. When a government spends more than it takes in, it's running a deficit. And when a government earns more than it spends, it's running a surplus. The national debt is something different. It's the total amount of money that the U.S. federal government owes to its creditors, citizens, foreign governments, and more. In 2019, America's debt stands around $22 trillion, which is considered the largest debt in the world. Some argue this isn't too big of a problem right now because credit is cheap and foreign countries are eager to put money into U.S. debt. But others warn that increasing debt could jeopardize the economy in the future and put at risk Social Security and other benefits for younger generations. And with each year, the national debt grows by accumulating the deficit from the previous year. It's a cycle that's hard to break, but it's essential to do so if we want to put our nation on a better path for economic growth.
Sorry, I had to end that because the commercial started playing and picked up the commercial audio. Yeah, that doesn't worry you. That doesn't scare you. Now we're on this thin ice. I mean, you should. We're not gonna be able to pay that. So, being with everything that I've told you and everything that you just heard, December 10th is coming, and December 11th we're gonna hear the Fed. What are they gonna say? What am I looking for? What I'm looking for is for them to talk about their letting inflation run higher. Because I believe in that day when they announce it, the bond market is gonna sell off more. I don't know if they'll invert, but it's gonna sell off, and because you're not gonna want to buy it if you're not gonna, you're gonna let inflation, and they're gonna put liquidity. If they announce QE4, the market will rally. Gold should rally. It could be that it sells off, but it could start rallying. So that's why I'm saying I'm looking to see if we're gonna start getting above those levels, 15, then 15.10, and then 20. The big one is 15.30. 1530 is to me is the biggest one, because then we could push back up. Do I think gold could go above the 1900 in a few days if they announce these crazy things in the repo market? And what they're gonna, I also want to hear about the repo market, because like I said, if you listen to the All Out podcast, I'll keep bringing it up, All Out podcast until December, and we'll see what happens. The All Out podcast on the repo market. I want to see what they're going to bring up on the liquidity side, because they keep dumping money into it. There's only so much they could keep dumping, so that before they make it permanent. Is QE4 going to have some kind of plan for liquidity for the repo market for those banks? Because interest rates are going to keep getting higher on those. Eventually, they're not going to be able to keep them suppressed for so long unless they announce something. And if they do, like I said, I expect the market to rally, but then I expect gold to continue to rally as well, and silver. So other things I'm looking at, I'm sure they're gonna announce it. I'm sure they're gonna talk about letting inflation run higher. You can only hint at it for so long. Balance sheet is gonna increase once we get to the 4.4 trillion. I mean, we're gonna surpass it. There's with QE4 not even being announced yet. If they announce it, we're gonna surpass it. People are gonna be, that's normal. Everything comes back to the basics. It's gonna come back to basic economics. Where you cannot have this be normal, where normal is gonna eventually come back and bite them. We're no longer the dollar is no longer the reserve currency. The U.S. is time to pay the piper. Emerging markets are gonna rally off of that. So the thing I'm gonna touch on is, right as of now, like I brought up before, is just the FOMC. You know what they expect the rates to go up and down hasn't changed. No one's expecting a cut. If anything, it's gone up 2 basis points for a interest rate hike. That's a big deal. Donald Trump and his tariffs, we're gonna pay for it. That happens, at least I got my own God took he late. from him pushing back the tariffs. I mean, I would have gotten a lot more, but I'll take it, And this is something I want, yeah, it's from Deutsche Bank. I get it. Deutsche Bank is not a great bank, but it doesn't mean they're wrong on everything. Yeah, ROI is not great. That's why the stock is doing what it do. But basically, they come out to euro to rival dollar as top funding currency. Deutsche Bank says. They're gonna have to look at other currencies. That's why the Libra, to me, like I said before, Libra does make sense if you're gonna back it up with a bunch of different currencies. You're gonna be allowed to put different currencies, whatever you want in it. You can have more dollars if you want, than euros. You can have more the pound. Whatever you want to do with it. It makes sense. You don't have to trade in the forex market. You just do a Libra. I was looking forward to the Libra thing because you want to travel, to Europe. Just have Libra in pounds. Start trading it. You'll be fine. Have more euros, you'll be fine because you'll go over there and trade your Libra, Facebook Libra. So eventually this will be the thing. No one wants to hold euro cash as an asset anymore, but everybody wants it as a liability. As a result, the Eurozone is emerging as a new global provider of liquidity to the international financial system, slowly placing the dollar. It's starting. I said it before, I've shown you a bunch of articles where people are questioning the dollar. Donald Trump with the tariffs and, always hitting everybody with sanctions that we don't agree with. You're pissing everybody off, basically. You're getting them annoyed. So why continue to allow the U.S. to keep hitting you with it, with sanctions? And, if we don't have a dollar as a reserve currency, we can't hit other countries with sanctions. They're not going to honor it, because why would they? If we need to borrow in euros, Whoa, we could be Argentina. Trump hit. Oh, by the way, Trump also hit Argentina and Brazil. So why, if he did that, that tells me he's gonna hit them with December 15 tariffs on China. So what am I doing? What am I doing next? With gold rallying and all this stuff that I just said. Like I said, I'm still looking for because some of you bought the puts that I said on the Walgreens. Again, if it gets to $55, sell half of it. What I'm gonna do with that money, or the other money that I'm dumping in, I'm looking at, since the tariffs come in December 15, I believe they're gonna happen. I'm trying to see if the market rallies tomorrow somewhat. Usually you can buy gold cheaper in the morning if there's no news. So I'm looking to buy options for the December the 20th for a quick flip. If I could do a quick flip December 20th on KGC, I'm playing the KGC. That'll go up to 550. I'll look at which is a big move for that short time. I'm looking to February, like I said, somebody moved 300 million into February. I'm gonna look to put that in February. I have some already for end of December, middle of January, end of January, February as well, but not as many as probably should. So that's why I'm looking to get it. Roll everything as much as I can into February. Gold, like I said, gold, Newmont, AUY did a 52 week high. I like AUY. American Eagle's still going strong. AU is going strong as well. I mean, they're all gonna go back up to when gold was at 1560. They're when they were making highs almost every day in September, early September, no, late August. So they're gonna do that. I believe they're gonna do that. So that's what I'm looking at. If the gold sells off tomorrow a little bit, if we don't get any news, whatever, it stalls the futures, we do that, then that's what I'm looking at to do. So now the future market 619, but tomorrow we get the ADP data on the employment as well. So if that comes out negative, gold will sell off. Negative, gold will rally, and then we'll probably most likely be at the 1500 level. Like I said, gold rally is hard. The volatility in the gold market is what I like. It's what keeps my interest in. See what happens tomorrow, but that's what I'm looking at doing. I'm looking at rolling all these gold, silver miners into February. I'm looking at seeing if we hit on a few puts that we have across, Netflix, Roku, the companies that are growth stocks, right? And I'm looking into value companies that have money, cash flow positive, cash on balance, all these other things to continue growing, even though people think they're overvalued. All right, guys. Thank you for hanging out. And if you have any questions, go ahead and reach me out on Twitter, Instagram _still_lost, and Facebook. No, I don't have my Facebook. I don't have Facebook. Oh, you could message me on here, Twitch, on Through the Whispers. Comment on YouTube. That works too. Remember, guys, you don't have to be the smartest person in the room. You just have to be a business listener. Thank you for hanging out and have a great night. And let's make some money.